A very good morning and welcome to Core Finance. My name is Malcolm Graham Wood and I'm very much looking forward to my latest CEO interview. Today, for the first time, I'm absolutely delighted to welcome Nick Cooper, who's CEO of Ophir Energy. Good morning. Nice to see you.
Morning, Malcolm. Nice to see you.
Yeah,
thanks for having us aboard.
It's a pleasure. It's a pleasure. What I'd like to do to begin with is to say, could you give us a sort of overview of Ophir Energy, and then we'll go into the assets and things bit by bit, if that's okay with you.
Absolutely. So Ophir is an independent E&P. We're full cycle, so working from the most mature assets forward. We have a production base in Asia, which is characterised by being quite long life. It's in Thailand and Indonesia. The production breaks even at a pretty low price. It breaks even at about $12 a barrel across the whole piece. So we make reasonable margins. It's quite long life, and so that's a good foundation for any business. Yeah. In addition to that, from the earlier phase where we were pretty much majoring on exploration in the first few years post-IPO, we found quite a lot of resource. We found about 1.5 billion barrels net to Ophir. So, in the time that had us ranked as one of the better or luckier, if you like, resource finders in the industry. We were quite lucky in that we sold about a third of that before the cycle turned, which gave us a strong balance sheet. Left about 1 billion barrels net to us, mostly African gas, and we used that to reposition the company to give us the production, the big resource base of 1 billion barrels that we've still got, and to continue exploring and chasing growth. So excellent. We are reasonably well balanced and pretty healthily funded, thankfully.
Excellent. Right, I'm going to ask one or two questions about the assets, and you won't be surprised to know that I'll start with Fortuna, if I may, the FLNG project. I'd like to know some detail about it. Obviously, the economics, the milestones, the plans, and then clearly the long wait for FID, which is what's been people have been asking a lot. So let's have a look at the detail of the project. Yeah.
So this is obviously the question on everybody's lips, and quite rightly, and it's what's turned me quite grey in the last few years. So let's look at the fundamentals first, and then we'll come to the here and now, to the extent I can update you. The fundamentals are that we found about 3.7 trillion cubic feet in Equatorial Guinea of gas, and that gas flows incredibly well to the surface. It is characterised by being very clean gas, so it comes out of the ground cleaner than it comes out of the pipe system here, so cleaner than you get in your cooker at home. That means it can be processed very simply on a relative basis and quite cheaply, which means that we can turn it into LNG in almost the cheapest way anybody can outside of the Arabian Gulf. So if you ignore, say, the Qatari deposits, it's about the cheapest greenfield new LNG in the world. Now, if we wind back 3-4 years ago, when the cycle turned, the LNG world, which you don't tend to see very often in the independent sector. Normally these assets are too big for companies like Ophir. And so the LNG world completely stopped. There are times when everybody's building LNG and times when everybody's stopping. About 3-4 years ago, everybody stopped their LNG plans because the oil price had crashed, the gas price had crashed. And we obviously had the option to do the same thing. We had 2 LNG assets, ironically, because of our gas finds in Africa. One was in Tanzania, which did slow down. Our one in Equatorial Guinea, we operated, and so we had the choice of either putting it on ice or thinking about whether we tried to be bravely counter-cyclical. The reason being is the industry tends to herd, and so it builds everything at once or it stops everything at once. And we thought that the easiest thing, frankly, would have been to put it on ice. However, because the gas can come out so cheaply, we thought that if we were lucky and we could lock in bottom of the cycle construction costs, we could have a very, very attractive value chain, which would be worth a lot to shareholders. So that was the simple thesis and why we've been spending quite a lot of time and energy on it. So most of that we got right. One bit of it we underestimated. So as we came into last year, we had 4 things to do on the project. 3 of them we completed, which were basically getting all the contracts signed, getting the government agreements agreed, all the construction work ready, and shortlisting and selecting our offtake. All of that was done by the middle of last year. The bit that we underestimated was the funding side of it. And I mean, I guess looking back, we were perhaps naive or whatever you want to call it, but the advantage was we locked in bottom of the cycle pricing. The disadvantage was we went into a lending market that really wasn't lending much to oil and gas companies at all, and we've seen the issues other companies have had in that regard. And although we were financially quite strong, raising new money for a project when everybody was going the other direction was tough. Add to that the fact that floating LNG, which is what we're doing here, was seen as prototype at the time. The banks didn't have their conventional models for lending against it. So we probably underestimated how risk-averse the lending market was. That was our mistake. I think that what then had transpired is, having got all other aspects of the project ready, middle of the year, we then missed a couple of deadlines, unfortunately. As a main board listed company, we are incredibly heavily scrutinised, rightly, for what we do and don't say publicly. We had a couple of deadlines which we missed. Now, they were communicated to the market because we had very solid basis for thinking we were going to get the funding sorted. Unfortunately, we missed both of those, and that has been a big... we've been pilloried for it. Let's not beat around the bush. What I'd quite like to sort of explain, and it's hard to explain in press releases, is that a project financing, you rarely see LNG or project financings in smaller companies, certainly not complicated value chains like this. It's not like a typical A to B negotiation between you as lender and me as borrower. We've got about 10 parties in the value chain, and so it's like herding a school trip. You get everything right, then one party thinks, oh, there's something I've missed, I need to adjust this, and it ripples across the other 9. And it's not just about the funding, it's also about risk sharing, because what we need to do, we're a smallish company with a very big asset. If we get this airborne, which we hope to soon, it will transform our financial profile and operational profile. But of course, with opportunity comes challenge, and what we need to make sure is that we don't get this project airborne in a way that we risk everything. So we've had to manage the risk carefully. Now, that's not something that people think about. It's they think, can you get funded or not? That is only really one part of it. How you manage the risk sharing between the people that build the bits of kit, the people that buy the gas, the government, that is actually quite complicated. It's rather dull, and people aren't that interested in it. I'm sorry to bore you with it. But that is, I guess, the reason why this has taken longer than we would have expected. All that said, if I come to the here and now, we would not be able to publicly make the statements we're stating if all of the people that advise main board companies weren't comfortable with what we're saying. So what that means is, while nothing in life is ever certain, we've got a very good chance of getting this project airborne in this year. I have learnt from bitter experience last year that trying to predict the specific week or month this gets done, I can't do it. As much as I huff and puff to get it done. But so our guidance is this year, as soon as we possibly can, is what we're driving for. And as it stands at the moment, we've got a couple of ways of getting that done, which we're confident about.
Excellent. I think that's very honest and open, and as you said, you've been once bitten on making deadlines and so on. So, but it's an important thing to know that Fortuna, it isn't, Ophir Energy is not just about Fortuna, because looking through the recent set of results, there were plenty of good things to pull out of them. So what I'd like to do now is have a look at some of the bits in the rest of the portfolio, and in some detail, reasonable detail, but because I see that you increased reserves by, was it 13% last year, which is pretty good by anybody's standards. So let's start off with Duan.
So our Asian production, which is our reserves base at the moment, it comprises 2 fields in Thailand. The real heart of that is the Bualwang field, which we operate. So we've got 100% of this Gulf of Thailand field in quite shallow waters in the Gulf of Thailand. The field's been producing for 10 years now, so we know her pretty well. And the way to think about these sort of fields is this field will do about 8,000 barrels a day if you don't push it too hard. We've got a couple of platforms out there. Every now and again a well gets tired, so we re-drill it. So that reusing of old drilling slots tends to rejuvenate the production. And every year or two we do an infill drilling program. That gets us to about 11,000 barrels a day and slowly declines back to 8. And then every now and again we put a new platform in. Now a new platform gives us a whole new load of slots and more opportunities to drain the field. And we sanctioned, towards the back end of last year, the 4th phase of development, which is going to see more of this infill drilling, but which is also going to see a 3rd platform.
Right.
Now, that activity is going to go through this year and next year. So this year we're drilling, next year we're putting the new platform in and drilling through that. And that will take production up to around 14,000, 15,000 barrels a day again.
Yeah.
So now, of course, oil fields decline, but these assets in the Gulf of Thailand can be relatively evergreen. When we acquired this thing 10 years ago, we thought it was 15 million barrels. She's produced 30 million barrels in the last 10 years. We've got about 28 of 2p booked on it going forward, and probably maybe as much again over time. And we've also got some. We've also think we've probably got some exploration potential to tie back to it. So she's quite youthful still, even though she's 10 years old.
So the 4th phase of development, this 3rd platform, the capex for that, how quickly would that repay, do you think? Is it
pretty quickly? I mean, it's quite a big chunk. It's $138 million, which is roughly 30 odd this year and the remainder next year. But the wells themselves pay back within 6 months. When you add the platform in, you pay back over about 12 to 18 months. So it's very high return activity. And you know, when we're breaking even at such low prices, it's very good margin. The other thing is, in Thailand, we work in a tax and royalty regime, which is like the UK. So you actually get tax benefits for reinvesting in these assets. So that accelerates even faster the payback.
Excellent. Now let's talk about Carrington, where the growth potential looks pretty good, because I noticed that you've already agreed an increased gas price, and you're planning to double production by 2020, is that right? Yeah,
we hope so, maybe even treble, if we're lucky. So Carrington is much younger than Bualawang in the field, and it is right in the middle of the Indonesian half of Borneo. It is the only onshore production onshore Borneo, and is in quite a remarkable location. So it's quite remote, and it has taken several years to get the first phase of gas production up and running, and a lot of effort, logistical effort. Now, it is up and running. She's reliably producing. We're pleased to have announced recently that the gas price has been increased on that, so that's great. But that's really the start of it. We wouldn't have done Carrington if it was just for the first phase. The real optionality is on growing it. The field has always been known to be a lot bigger, but we can't sell more gas until we have it certified. That required a 3D survey to be shot. And you can imagine onshore 3D in the middle of Borneo, it's quite laborious. So we did that last year, safely and environmentally, very sensitively. That is done now. That means that we can effectively go to the authorities and say, certify this, there's a lot more gas. Now, the gas is currently consumed by the national generation company with a power plant. Indonesia is a fast-growing country. They want more power, so we are hopeful of doubling the offtake with a second power plant being built, and we would like to hopefully get a gas sales agreement signed this year so that can go firm. In addition, though, there's still more gas that we'll have certified. So what we'll do is try and get a 3rd phase going simultaneously to a 3rd party. And despite its remoteness, there is quite a lot of commercial usage for gas, and indeed maybe even LNG. So that one is probably, we're hoping it's simultaneous. That one is less certain in terms of the outcome, but we're looking to double or maybe treble the production. And then she will become almost as an important cash flow generator as Fortuna will be. The thing, I guess I'd say, typically, oil fields are great, but they tend to decline. Once you get a gas field on stream, and it takes longer, the gestation period of building these value chains, and you can see that with Carrington, we just talked about it, we can see it with Fortuna. But once you've built them, they tend to be annuity cash flows, and then you're in a very different world, because at that point you don't really need to reinvest in them very much. It's a question of what you do with the cash flow. Now, you mentioned Tanzania earlier in our discussion, which looks a bit like it's on the back burner, or, you know, because I'm afraid I'm old enough to remember all the excitement when the big wells came in and so on. Well, what's the form on Tanzania at the moment? I'm that old as well, actually. It was so the excitement around East Africa was I guess around 2010, 2011, 2012. And what happened in East Africa, if I could summarise it, on the Mozambique side, Anadarko first came in. Right across the border, the other half of the same delta, Ophir found itself. Now, Anadarko went in with a big drilling program, and Ophir, because it was a much smaller company, only had seismic to shoot. Anadarko started working, Ophir quickly started drilling too, and lo and behold, same delta, similar-ish results. So in Tanzania, the outcome of all of that is that so far, on a recoverable basis, there's about 33 trillion cubic feet recoverable found. Now, that is a huge resource base. It's not as big as Mozambique, but it still is far too big to not be monetized, particularly when it's facing the Pacific Basin and Indian and North Asian markets. So it will go somewhere. What has happened, though, of course, is that in the intervening few years, as we all painfully know, the cycle's taken this downturn, and most LNG has been frozen. And a combination of, we don't operate Tanzania, we did, but we brought in BG to operate that, and subsequently Shell. That process meant that the bigger operators froze all of their LNG until they get the better pricing signal, which is a higher Brent price. With where we are with Brent now, if it holds, you would expect LNG projects to start getting reheated. And Tanzania's scale and its cost effectiveness of supply is relatively cheap for a new build plant. Not as cheap as Equatorial Guinea, but it is still quite cheap. It certainly makes money at current prices. You would expect that signal to mean that the project gets moving again. So it's been in hibernation really for 2-3 years. Hopefully in the next couple of years it can get going. And it's big. We've got 500 million barrels in Tanzania.
I know, and I remember the time when all these discoveries had been made and everyone was worried that the whole of East Africa would end up with being LNG plants all the way down and sailing off to the Far East and the Pacific Rim. But that's interesting, thank you. I'd be interested in your exploration strategy because in your final comment you said, I think, you've rebalanced your portfolio and CapEx prioritisation from its primary exploration focus. So I know you're looking at Mexico and I know you're looking at Equatorial Guinea for exploration. What are the Ophir plans on exploration? So
if I can use maybe an analogy, hopefully it's a good one. The old Ophir was a very successful frontier explorer and had a bit of luck in being successful. Everybody needs a bit of luck in life. It tested 8 different plays. 2 of them worked in Tanzania and Equatorial Guinea. It found a lot of gas. Great. But the analogy would be you're playing 20-20 cricket. You're going and you're swinging for the covers every time, so you get bowled out a lot of times, a lot of failures. Now, that is a high-risk, high-reward strategy. It also tends to mean that you tend to be operating in basins which are remote from infrastructure, so it takes a long time to monetize them. And Equatorial Guinea, we are best part of a decade, and hopefully now we're monetizing it. And so that strategy served us well to a certain point, but we needed to adapt it. And once the cycle turned, it was clear that firstly we needed to become a full cycle company. So we needed to be able to fund ourselves sustainably ourselves without needing to rely on external funding, and thankfully we've achieved that. But what we also need to do is look again at exploration and say, one, let's build a more appropriate approach to a batting innings. Let's mix a few singles and doubles on the scoreboard at lower risk with some swinging for the covers. And secondly, let's recognise the fact that most people had stopped their exploration activity completely through the period 15 and 16, which meant there was a bit of a global open goal for the few players that were there.
I've always said that me and Woodmatt were going through this process in 16, 17, 18 about how much the international capex has gone down, and I think between us we agreed on about $1.5 trillion worth of capex off the thing. So I'm looking forward to that because you'll be in Mexico as well.
Yeah, so I guess what I say is what we decided was, because there were so few players still involved. I mean, at the top of the cycle, let's say 13, 14, I lost count beyond about 350 credible, technically smart finance players doing upstream international. Beyond that, I lost count, so I'm sure I missed a lot. But when the cycle turned, there was a tenth of that at best, which meant that the entry costs were very, very low. Seismic costs were very low, and actually drilling costs were very low too. So not many people were drilling, but getting into things and shooting seismic was a bit of a no-brainer for those that were around for the longer term. So us, and we weren't alone, but there was only a handful of other independents who were doing this. We actually quietly backed away from our frontier high-risk stuff.
I noticed. I remember you had sort of 9 countries.
Correct. And we got out a lot of those. But what we did say is, where there are proven world-class hydrocarbon systems, where we know there's oil and gas, we don't mind still getting in, particularly if we can get in. And so what we did is we backed away from a lot of the frontier activity, almost all of it. But we got into Mexico and we redoubled in Equatorial Guinea, where we know the parties well. Now, Mexico was actually an accident. If you look at it, you've got Premier, Ken, and Ophir in Mexico in quite a big way. Now, ordinarily you'd expect the Americans to have been all over it, and I think the British companies were expecting that because of where it was in terms of when Mexico opened up for international investment, and the fact that the US players were in retreat internationally. The operating capability had to come from the UK, so we found ourselves, frankly, almost by accident in that. Now, we've ended up, Premier has had a fantastic success with Zama. There's only been 2 international wells drilled by the international players since Mexico started to open up. One by ENI, one by the consortium with Premier. They've both been great successes. It doesn't guarantee success with every well. We know exploration is hit and miss. But this is the other half of the Gulf of Mexico. And we found ourselves almost by accident. I mean, we've been working on it for 4 years, but we never could have predicted that we would have the equivalent of 300 US scale Gulf of Mexico blocks in Mexico. So we've got the biggest acreage position of any listed player. So that's a great placeholder for the future.
Brilliant. In brief, your finances, the balance sheet, and so on.
We've always been probably a bit conservative and dull with our balance sheet because we were lucky and sold a lot of gas at the top of the cycle. We were able to, and we have good cash generating assets. We've always been in net cash the last few years, which means. Although we've got the ability to draw debt, we've mostly not drawn it. And so we're actually sitting on a reasonably good cash pile, and people have been saying, well, why don't you spend more money rather than why have you got too much debt? So that's a nice place to be, albeit on the conservative side. We will remain conservative, but what we have got is a 5-year business plan that can take what we've already got, our producing assets and Fortuna. We think we can at least double our current production, maybe treble it from current levels. We can at least double, maybe treble our net asset value. And that's before we do any exploration or anything with Tanzania. Now, we actually hope to be exploring again quite vigorously from the latter half of this year. We've got things to do in Thailand. We've got Mexico coming around the corner, which won't be far away, and we'll talk about more of that in a couple of months' time. We've got Equatorial Guinea. We've got other positions in Asia as well, which we'd like to be chasing. So we can fund all of that. So it's actually, we're not being complacent because it's a tough world out there. But actually, I think that one thing people have always missed is that we've never had any financial risk around the company. If anything, we've been too conservative.
Well, that's good. I've got lots of questions left, but we're running out of time.
Sorry if I've heard
I'll bring you back in again. But what I'd like to do at the end is ask the CEO to say, where would you hope to see Ophir in 12 months' time, Nick? How do you see it?
In 12 months' time, obviously I hope Fortuna is done, and we remain confident that can be achieved in the time frame and hopefully sooner rather than later. I would like to see us exploring again and drilling exploration wells. I've always been exploring, but actually drilling wells. And I'd like to see us growing our production. And hopefully by that time, we can be in a position where actually we're able to release a bit of capital, because the ideal nirvana, of course, is adding share price value through drilling and doing smart things in the portfolio, but also returning a bit of capital to shareholders. So that would be a great place. If we can get there in 12 months' time, that would be a great Christmas party. So fingers crossed.
Thank you very much indeed, Nick. Today I've had the great pleasure to be talking to Nick Cooper, CEO of Ophir Energy. I think he's been very open and it's a very interesting story. So thank you very much indeed for watching. Thank you for watching Core Finance, and I look forward to seeing you again soon. Bye now.
Thanks, Malcolm. Thanks for your time.
Pleasure.
Thank you.